Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by BOMI.org. Check them out. They are the leader in facilities and property management training, and you can check it out at BOMI.org. Well, today we have another great show for you. We're going to talk about Deloitte's 2019 Commercial Real Estate Outlook. Now, this is a great publication they put out every year. It's been out for a little over a decade, and they look at the impact of everything that's impacting commercial real estate and the economy. You know, I think commercial real estate is great, but it's a great investment. But we always have to look forward and see with the old saying, right, where the skate where the puck is going. So this is another great report to give us an idea of what to look out for, what's impacting the business, and how to do better at what we do, wherever that is, if we own properties or help people in some way that do. Please welcome my guest. Is Jim Berry. He's a partner with Deloitte. He's also vice chairman, and he leads the U.S. real estate practice at Deloitte, and he's joining us on Skype. Jim, thanks for being back with us again.
Michael, thanks for having us, and I look forward to the opportunity to talk about our 2019 real estate commercial outlook for Deloitte.
Yeah, and if you will, briefly tell our audience, what is this report about? What's the mission, and how do you do it?
Yeah, we're really excited about this year's report because what we did at Deloitte this year is we actually surveyed over 500 global investors and sought their input on what they're seeing, how they're looking at, and how they're valuing, if you will, for their investments and their capital allocations, certain aspects of real estate, in particular technology, talent, and as you just mentioned, things that are facing the real estate industry and that we're looking around the corner on.
Okay, so you reached out to these global investors, and it's kind of interesting when they're looking at the entire world and they look at the U.S. to kind of get their perspective, right?
That's correct. And kind of the highlight of, or the headline of the survey is that that over 97% of those that we surveyed indicated that they're going to continue or increase their capital allocation to real estate overall. But we also saw in that data, as you drill down, that they are really looking at abilities to diversify the way that they're putting that capital to use as well within commercial real estate.
How do they view the U.S. right now as compared to over history?
Yeah, actually very, very soundly. So when you look at the capital allocations and where that's really headed, the top three that are listed are the U.S., Hong Kong, and China as far as capital allocations. Similarly, when you look at those who are leading the pack as far as increasing the amount of capital that's being allocated to real estate, then you're looking at U.S. and Canada and Germany right at the top.
Right, so they're increasing their allocation. So what are some numbers? What might we expect for an increase in foreign capital into the U.S.?
Well, as I just mentioned, those kind of percentages are pretty positive overall for us. And the other thing that's interesting about just the timing of the survey and therefore the results is remember that we're also dealing in a dynamic situation with interest rates changing. Brexit hasn't fully settled. There's still, not just in the U.S., but in other jurisdictions where there's some tax matters that are being dealt with. So I think what it really points to is that within the real estate industry, we've really achieved this level of maturity. So normalization of capital allocations is there. The industry is being looked at positively. But it's also pointing to maybe a little bit of the patience of capital still being there, willing to invest in these longer term assets.
Yeah, and I see the theme of the report here. Agility is key to winning in the digital age. So when you finish this report, is that one of the things that kind of rose to the top?
Absolutely. And so one of the specific things we covered in this survey was the impact of technology and how investors are really looking at that as well. And so when you break that down and get behind the data, what you see is there's actually a strong willingness and even a look by the investors to say, what are companies doing in order to advance technology within their operations, and how that company that they're looking to invest in is utilizing data and analytics to better operate and manage themselves. So the core theme, once again, is that the investors really say, hey, the dynamics of real estate are really changing. Technology has moved forward at a very rapid pace. We really need to make sure that the real estate companies we're focused in on are not just the companies that are doing something today, but are really thinking about their tenants and the ultimate end users and how that dynamic's going to change over time.
Right. So when you talk about technology, you mean all sorts of technology, from the actual operations of the buildings to the tenants that we choose, right? Being understanding and using technology, and then I guess the artificial intelligence, the kind of transparency of the entire industry.
Michael, you're 100% right. So when you look at it, another interesting piece of data that came out of this, and that is the value that's being placed on companies who are developing very specific strategies on flex lease or flex space. And so our survey data also showed that well over 50% of those who are allocating capital are looking to allocate more capital to those who have a developed strategy around flex space, flex lease, and over 44% flex space. What does that mean? I mean, once again, I think it's understanding that the dynamic of the tenant model is really changing. So how companies are going to utilize real estate, and the importance of actually evolving and diversifying the portfolio to actually be in a position to take advantage of how companies will ultimately use real estate.
Well, that's interesting too, because flex space or flexible leases and terms like that are not something the debt markets typically like to see, right?
That is true. I mean, it is interesting, and so that's why we thought it was interesting to actually go to follow the money a little bit and talk to the investors. And so, but it also shows, once again, the importance of looking ahead, and that's really being valued. And as part of that, I would also say, the real estate, we've always struggled with how much do you invest in technology. We've always lagged. We've always been a follower. But now what's clearly being indicated is the time's now, and we've really got to move forward as an industry. But the good news of all of that is, by having that a clear part of the strategy, being able to articulate that strategy, and being able to, as you communicate that through, that the investors are really looking for that, and so they're going to value that, and actually, therefore, taking a bit longer term view, perhaps, on how that investment will actually return itself.
Yeah. Well, that seems like it's a great idea when you're trying to attract capital. I mean, it was a company or equity, but it seems like when you think about the flexibility side on the debt side, it seems difficult. So, how are people in these companies and these real estate companies attracting capital? Is it just showing that you're using technology and using it? How do we show me the money?
Right. No doubt about it. I mean, the traditions are there, right? The baseline economics of real estate are fundamentally the same, and the ethos of what we think about from the core strategies of, let's take flex space or whatever, doesn't change. Location matters, right? But the dynamics of that space and how it's managed are really evolving and changing. And so being able to demonstrate that the strategy that's being deployed takes into account not only the current tenant use and dynamic, but also how that will change, and building in these elements to allow for a better stickiness of those tenants. And that also ties into some other elements within our survey. which we also dealt with proptechs and how that's continuing to evolve. And so actually having a defined strategy of how to embrace some of the proptechs as well is actually being valued.
Tell our audience some more about that, Jim.
Yep. So in our survey, we actually also, when we went out across the globe to those 500 investors at Deloitte, we also asked them, okay, how are you looking at and how are you thinking about proptechs and how best the industry should be utilizing those? And what came across as very clear is that there's better opportunity for real estate to actually be teaming with, partnering with proptechs. So in the past, I think there's really been a sense that the industry has treated that more as a disruptor, and therefore has been slower to actually look at the technology that's being developed and how to incubate that or how to better align with that early on, whether or not through teaming or whether or not through actual investment strategies. But what we are seeing, and you'll see this particularly, I think, in some of the logistics companies and real estate companies and so on, is a better formulation of that particular strategy and how better to team with, partner with, or even buy or invest in proptech companies.
Yeah, and it comes back to agility, right? Kind of the theme of the report you found.
If there's one common word in our Deloitte report, we are definitely using the word, how do you build agility into, big capital assets and those kinds of things. But that will be the magic formula.
Yeah, well, it makes sense. Well, we're going to take a short break. When we get back, I want to ask you some more about this report. There's some real interesting things in here about talent, about cyber risk. Stay with us. We'll have more. I'm Michael Bull. This is America's Commercial Real Estate Show.